Hey, what's up YouTube? First Stone's Investing back with another video, and today I'm excited to be giving you guys my $50,000 Robinhood portfolio update. In today's video, we'll talk about how my portfolio has been performing, 5 of my biggest losers, and 5 of my biggest winners as it pertains to my stock, and finally we'll end with some dividends that I'll be receiving for the month of September. So if you haven't done so yet, please don't forget to like, comment, subscribe to the channel, and with no further ado, let's get right into the video. So like I said, I'm very happy to get to this $50,000 mark in my portfolio. I think it took a lot of patience, hard work, and consistency in developing my portfolio to get to this particular level. So this is not financial advice, but for my particular case, it took me researching different kinds of companies, looking at their balance sheets, actually taking the time to do that in order to develop a stronger portfolio, and also consistently adding money to the portfolio and investing in these companies. And for me, over time, it has consistently helped to grow my portfolio. Taking a screenshot of last September, we can see that my portfolio was worth $23,000, and now 1 year later, it's worth almost over double that amount. So I'm very thankful for that. So taking a peek at the portfolio, we can see that for the day, I'm up $539. For the particular week, I'm up $940. For the last month, I'm up $1,698. For the past 3 months, I'm up $5,262. And finally, for the past year, I'm up over $9,000 or almost 22%, outpacing the S&P 500 and definitely outpacing any kind of rate that you could receive from any kind of bank. So very thankful for that. For the next portion of our video, we'll be talking about my 5 biggest losers in the stock market. So my biggest loser thus far has been NEO. Right now I'm down $674 or negative 16%. I'm still bullish on this particular stock for many different reasons. According to a Motley Fool article that I'll reference in the description, China grew their auto sales by more than 10% through August to more than 16 million cars. And also the Chinese authorities have reported an improved recent supply issues of crucial metals, which is good news for NEO. They also have a renewed manufacturing agreement with their state-owned partner through 2024, and they also plan on doubling their capacity. They're also releasing 3 new vehicles next year, including their first electric luxury sedan, the ET7. So the next stock is Lucid Group. Right now I'm down $289 or negative 26%. This is an EV company based in Arizona, and I'm kind of disappointed in their sales so far. They haven't made any. Right now they're supposed to deliver 577 vehicles in 2021, and they're supposed to deliver 20,000 vehicles next year. Now if they can start delivering vehicles, they have an actual product. I've visited their facilities in New York, and also they have one in Brickell, Miami. If they can start to deliver vehicles and start shoring up their balance sheet, then I'm more than likely going to invest more into this particular company. The next stock is Robinhood Markets, ticker symbol HOOD. Right now I'm down $17 or negative 28% on that particular stock. I only have 1 share. I'm going to continue to add to this particular position. I believe that Robinhood will continue to be a great player in the financial markets in the future as a small fintech company, especially among the Generation X and Gen Zers in today's society. The next stock up is ARK, Next Generation Internet, ticker symbol ARKW. Right now I'm down $9.63 or negative 3%. This is a basket of stocks made by Cathie Wood. They have about 46 different stocks in the portfolio I can show you. So some of the bigger holdings in their portfolio include Tesla, which is 10% of their portfolio. And with them being down from their high of $900 this year, it has taken a toll on this particular ETF. They also have Grayscale Bitcoin Trust, Twitter, Coinbase, Shopify, Square, Twilio, Spotify. So just a lot of stocks that Cathie Wood thinks are going to be very prominent in the future. All right, the last stock for the losers today is Roku. Right now, the stock's price is $340.48. Right now, I'm down $6.28, and I own around 28% of 1 share. According to this InvestorPlace article, I'm really interested in Roku because their revenues increased 81%. The platform revenue increased 117%. Gross profit was up 130%. Their active accounts were up 1.5 million, and their average revenue per user was up 46%, up to $36.46. So these are my top 5 best performing stocks, and my 5th best performing stock is Target. So far, my total return has been $945. I got it for an average price of $159, and I own just over 11 shares of this stock. So far, this stock comprises around 5.4% of the portfolio, and I do plan on increasing my position in this company in the future. So during the initial part of the pandemic in 2020, the revenues increased by 19.8%. However, in 2021, the revenues are still up by 15.7%. And during this year, the stock is up 41% year to date. So as I said, this stock has performed well, and I'm going to continue to invest in it. So next up is Microsoft. Currently, the stock's price is $300.56, and so far my return has been $1,596 or 50.77%. Currently, I own 15.78 shares. Hopefully, I'm going to get this to 20 shares by the end of the year. This is almost 10% of the portfolio. So looking at their revenue and their earnings, we can see that this has been increasing every year since 2018 and even before that. And this is what you want to see out of any company that you're investing in. And they also recently increased their prices on their Office 365 services for the first time in 10 years. And we can see that the changes have been between $2 and $3 per user. And right now we can see that Microsoft Office 365 has over 300 million paid seats. So hopefully these price changes will be able to increase their profits and revenue even more into the next coming years, which I'm excited about. So my third best stock is Alphabet, which is Google, and my total return has been $1,854 or 77%. Right now I own almost 1.5 shares of this stock, and it comprises around 8.3% of the portfolio. Hopefully I'll be able to increase my shares to 2 shares by the end of the year. And looking at SEMrush blog, we can see that Google and YouTube make up the top 2 search ranks in the United States with 20 billion visits among them. And all of that website traffic combined with all the ad revenue make them one of the best stocks to invest in my personal opinion. So next up is Tesla. Right now the stock's price is $753. My total return has been $2,825 or up 33%. I got in for an average cost of $562. I almost own 15 shares, and it comprises of almost 22% of the portfolio. We can see that their assets versus their liabilities were $52 billion for their assets and $29 billion for their liabilities. So they're doing a great job with their balance sheet and the ratio. And their earnings per share were 64 cents as of December 31st, 2020. And looking at their deliveries, we can see that their deliveries continue to increase as time goes along. In Q1 and Q2 of 2021, they were 184,000 and 201,000 deliveries respectively. And this is a great amount considering all of the supply constraints with the chip shortages that have been going on worldwide. So my most profitable stock has been none other than Apple. We can see that my total return has been $4,548 or positive 73%. I own just 68 shares and the portfolio diversity is 21%. Hopefully I'll be able to get this to 100 shares by the end of the year. We see that as of their last quarterly earnings report that their revenue was $81.4 billion, which was up 36% year over year. And their quarterly earnings per share was $1.30, which is absolutely amazing. This company is worth almost $3 trillion. They beat their earnings per share, their revenue, the iPhone revenue, the services revenue, the AirPods and Apple Watch revenue, Mac revenue, and iPad revenue was also increased. So Apple just continues to become a cash cow, and they have new products being released this month. So taking a look at my dividends for the month of September, we can see that I'll be receiving 16 cents from Johnson & Johnson. I'll be receiving $8.73 from Microsoft. Walgreens is paying me 11 cents. AT&T will be paying me $9.13. Target will be paying me $10.01, which is a 32% dividend increase for the year. Realty Income will be paying me 26 cents. Valvoline will also be paying me 2 cents. Element Solutions will be paying me 1 cent twice. I'm not sure if that's a mistake. Stag Industrial will be paying me $3.13. Applied Materials 18 cents. Duke Energy 11 cents. Home Depot 40 cents. Equinix 17 cents. Prospect Capital $6.50. Nvidia 7 cents, and Union Pacific 10 cents. And then I'm already receiving a notification that I'll be receiving a dividend from Nike for 2 cents. All right, so now it's your turn. What do you think about my stocks that I presented to you today? What do you think about the stocks that I had some losses from? My plan for those particular stocks are to continue to invest in them and continue to look at their earnings report to make sure that they're making money. And if they're not making money, then possibly move my way out of those positions. And then what do you think about my successful stocks? Would you consider investing in some of those same stocks as well? It's my hope that you learned something in the video today. I want to thank you for taking time out of your busy day to watch one of my videos. As always, please continue getting that passive income and continue doing your due diligence so that way one day, hopefully you can invest in great stocks, grow your portfolio. And I don't make these videos to kind of show off. I just want to make these videos to be able to teach you that if you pick your stocks the right way and do your own due diligence and your own studying and put that time in, that you can also become successful too and have a portfolio even bigger than mine. Stay safe out there, continue getting that passive income, and thank you for watching the video today. I'll catch you next time.